Hello traders, this is Blake Morrow with Forex Analytics, and you're listening to the week ahead video for October 8th, 2023. Now, it's Saturday though, on the 7th. I'm heading out and driving across the state for a football or soccer match, and so I wanted to get this video filmed for you and out into production or into editing so we could get it out for you early, or so you didn't get it late anyway. So I'm glad that you're here. Now, I got to start off and talk about something really quick. Pricing. You can see it right here. We have a new seasonal offer, and we do this only a couple of times a year, 2-3 times a year max. And one of the things that we made a mistake last week, we still said it had a trial. We don't do trials. You don't do a $1 for 10-day trial when we have a discounted rate, because we only do this a couple times a year. You have all year to try it out. And so those people that are waiting for the pricing, they get to take advantage of it. We don't do any trials while we're doing this pricing change. We had somebody that said, "Oh, I thought there was a trial," and so no, there isn't. Not while we have pricing discounts, the steep discounts that we give right now, only a couple of times a year. Look, if you want to take a trial of Forex Analytics, wait a couple of weeks, and then you can do that. Try it for 10 days. Download the app. It's only $1. Try it out and see if you like it. But for those people that have already done that, they want the pricing discount. Now is your shot, so take advantage of it. Okay, I'm going to move on. We've been doing that for like 8 years, maybe. Well, I priced 7 years of discounts, but you guys get the gist of it. All right, we've got a busy week. Believe it or not, there's still a very, very busy week in the markets. We've got CPI. That's going to be the big event of the week in the US. Everybody's waiting on the CPI data. And I will tell you this, we're going to have to talk about the reactions in CPI versus like non-farm payroll. There's a big difference. And you have to understand the difference as we move into this week of trading. So make sure you all stick around for that. We're going to talk about producer prices are also this week. There is a bank holiday. It's Columbus Day in the US. It's actually a Canadian Thanksgiving. Banks are closed, but the bond markets will be closed, which Gavin from the Forex Analytics chat room said, those bond traders probably need a bit of a break. Absolutely. After them getting just the snot kicked out of them for the last several months. Yeah, they probably need a day off. Anyway, but the stock markets will be open. So just keep that in mind. Also, what's also really important at the end of the week, and I'm not going to go through these charts, but I just want you to know it's going to be really important on Friday of this week. Now, we have earnings that are happening throughout this week, but we have a lot of bank earnings. We have JP Morgan, Wells Fargo, BlackRock, PNC Financial, Citigroup, First Republic Bank. Why are these going to be super important? It's going to be the comments that we hear from them. Earnings, yeah, they're important too, but you got to listen to the comments and see how banks and what type of comments they have regarding what's happening with yields, because this has been a big thorn in the market side for the last couple of, for a while now. So, but really, because the acceleration of yields and because the steepening of the curve, or re-steepening or reinvigorating, however you want to call it, that's happening too. All right. Hey, without further ado, let's get to the markets. Let's get to the charts. Now we can use the live charts here on Forex Analytics and draw on them. That's fine. We could do that as well if you want to do that. But I'm actually going to go to our charts that we use every week here specifically for the week ahead video, because I don't take off the drawings. I just kind of leave them the same so you guys can see them. Most of them. There's a few assets that I have to use amongst a couple of different charts, the ones that I upload here personally on Forex Analytics. These charts, you'll see a lot of the same stuff. So anyway, going back to, but I guess I should say, well, I'm here. When you're using Forex Analytics, and especially if you're using it for the very first time, there is a tutorial and page guide right at the bottom here. You can see it right here, page guide, you can go through and it'll teach you how to use it. There's also a tutorial. Let me exit this. There's a tutorial. You can go to the video tutorial and check that out. It probably needs to be updated, but it's still there, and it'll give you the gist of how to use Forex Analytics and the platform. All right, sorry. Get back to what's happening this week. Let's start with Monday. Again, we have Thanksgiving holiday out of Canada. We also have Columbus Day. So liquidity might be a little light when you get into North American trade or American this time zone. You might start to see things slow down. But Mexico has their CPI data actually on Monday. Why is that important? Well, it's really important for a couple of different reasons. Let's take a really good look at this chart. So the dollar mex, we're well above the 200-day moving average. One of the reasons why it's squeezed higher is because, well, there's two reasons really. You've had a rollout of carry traders we rolled them out to the hospital, right? Carry traders have been getting squeezed. Those are the ones that have been carrying the higher emerging market currency, higher rates and selling some of the lower yielding currencies. The EUROMEX, you can see specifically. I'll pull up the EUROMEX really quick. This has been a really big reversal here, right up to the 200-day moving average. They've been taken out to the cleaners, a little bit of a squeeze there. But also, one of the other reasons why the dollar Mexican peso has moved quite dramatically to the upside and Mexican peso has depreciated is because what we discuss, we've been discussing for the last couple of weeks, and the reason why I was buying, down here at these levels is because Mexico has taken away their program that they have initiated, ever since COVID, to kind of stabilize their currency. Well, I think they've gotten enough out of it, since this. I mean, you take a decline from, top to bottom, peak to trough. You're talking about a 35% decline in the dollar versus the peso, or a 36% increase in value in the Mexican peso versus the US dollar. In other words, the other way to look at it, they were like, enough is enough. They could remove that program, and that was our green light to be long dollar mex at that time. Obviously, since stocks have rolled over since then, we've seen an acceleration. Now, once again, what's happening this weekend or this week on Monday, we have CPI coming out of Mexico. It's going to be important because we're up against really key resistance. I want to show you a couple other resistance levels we're up against. So let me delete a few things here because we haven't looked at the dollar mex in a while on this show or on the week ahead show. If you look right here, we're struggling near that 618 retracement. It's a golden fib level, right? It's also previous support. Let me go all the way back here. Previous support from pre-COVID. This is just before COVID. Once we went to lockdowns, well, that happened, in March, but you can see the acceleration started, right? But that was the low pre-COVID. We're at that level right now. Is that a big deal? Hells yes, that's a big deal. Should you be short the dollar mex? Look, if you think inflation is going to be kind of persistent globally, Mexico is not to be excluded, the dollar mex is a great risk reward to be short. Now, I say that with every sense in the term. Watch your risk, because this is your risk right here. If it breaks above 1850 in any meaningful manner, it's gone. It's off to the races. Next thing you know, we're going to be trading at 1950, maybe 20. Well, now, why could the dollar Mexican peso spike up to those levels? Because it is a risk off currency. And if you haven't figured it out, the market is really, really worried about the rise in yields, right? The rise in yields, you'll look at the 10-year. I mean, this looks like an acceleration. Like we're gonna have a blow off top coming, where yields like spike above 6-7%, and things will break. Things will break in that type of situation. One of the things that's going to break is obviously the backs of U.S. dollar Mexican peso shorts. That's going to be what's breaking. You're going to see this spike right up to 20. So if you want to short the dollar Mexican peso here, I get it. I might actually take that position going into next week, especially if the CPI is a little bit stronger in Mexico on Monday, because I know my risk. You know your risk. It gets much above 1915, 1915, I said 15, 50, 1955, 1960. You don't want to be short anymore. But as traders, that's what we look for. We look for the best risk reward out there. So if you think the world's not going to come to an end and the markets are going to recover from here. I say markets, stocks are going to recover from here. Maybe the dollar max is not a bad short from here. All right, that's something to be thinking about. All right, now on Tuesday we have Norwegian. Let me get rid of these arrows here. I just want to remove. Whoops, I don't want to remove that. I want to remove this. I want to remove that. Out of Norway on Tuesday we have CPI. Now look, we've kind of broken higher. This has been a real sloppy move, and I think a lot of the reasons why the dollar Norway has been really sloppy is because it's been, dealing with crude oil. Crude oil has been a factor since out of Norway. Crude is one of the predominant exports, is fossil fuel. So, you could look at the U.S. dollar Norwegian krona as kind of struggling at the underside of this channel. If you want to look at it like that, that's one way to view it. One other way to view it is, we're in a pretty big range. So if Norway's CPI, and they also are releasing PPI at the same time. If it comes in a little hotter than expected, I think your risk is above, this 1130 level. If we get above that, then you kind of know that we're off to the races. The U.S. dollar Norwegian krona can act a lot like let me rephrase what I was just about ready to say. Norway's currency, the kroner, however you want to call it, it actually, same with the Swedish kroner, however you want to pronounce it. Those Nordic currencies, they can act a lot like an emerging market currency, especially in a risk-off type of environment. You'll see the U.S. dollar Norwegian krona take off if the market really comes under pressure. Look, this is what happened post-COVID. You see that? So, we could see the U.S. dollar Norwegian krona come off, especially if crude oil continues to weaken. But that will be a factor. I think you have to keep your eye on crude. Obviously, CPI, PPI on Tuesday morning. Now, one of the other currencies that is really sloppy right now, I'm going to say it's super sloppy, is the Aussie dollar. Australia's got business confidence actually Monday night, Tuesday morning. So technically it's Monday night for me. Tuesday morning for those of you that are in Australia land or in one of any of the Antipodean type of countries. But just keep in mind that Aussie is very, very sloppy right now. I'm going to get rid of this. But I think there's other currencies that are other things that are really sloppy too. Take a look at copper. Yeah, that's sloppy. We're trying to break down here in copper, and it's being sloppy, right? So is the Aussie dollar. It's being sloppy. Now you could argue that the double top has finally completed. Does that mean you shouldn't be bearish right now? No, because if we're breaking down, we're breaking down. I personally don't have any Aussie exposure, but it is a mess. I would be looking for something more significant in the Australian dollar. To be frank, if I wanted to be bullish, that means we have to get back above some resistance, which in this case would be right about here, about 65.25. You get above that, I think there's a good chance you could see a squeeze, right? You could probably see a squeeze like this. But right now, you have to look at the fact that we're making lower highs and lower lows. You all get that situation where we're making lower highs, lower lows, right? Stand by. It's Saturday morning for me here, guys. But by the way, and gals, if you like these videos and you think they're going to be beneficial to you and you love the preparation that you get every single week, please give my team a big thumbs up. Please subscribe to the channel down below so you don't miss any of this exclusive content, all these week ahead videos we've been doing for literally about 8 years. And subscribe to the channel. Did I just say that? And comment down below. If I miss something, I'm not going to catch everything. I'm trying to make this a little quicker as I got to jump in a car here momentarily. But so if I miss something, jump in the comments. We'd appreciate that. Okay. Again, thumbs up. I definitely would appreciate that. All right, moving along. So on Tuesday we have some Fed speakers happening. We have first of all we have FOMC Waller, and let me get over to the dollar index really fast while I discuss this. the dollar index is, I think, pretty important resistance here. Let me get rid of that since that was from a couple weeks ago. Let me just show you this nice and tidy channel that we have going on. Now, if you guys are a believer that the dollar is done and it's dusted and it's going to be finished, well, then you need to break back below right there, which is 105.90, right? It's this previous resistance. Then you start getting below 105.90, then it turns bearish. Well, we do have some Fed speakers, actually a lot of Fed speakers next week, but we have Waller, who he has a speech titled "The Evolution of Monetary Policy," and he's typically a hawk, right? So you kind of want to watch if these Fed speakers. One of the key components of watching them or listening to what they have to say is, you take like a Waller who's typically a pretty hawkish. If he starts to turn dovish, that could tell you a lot about where he's tilting, but more importantly, when they're debating as Fed governors, amongst themselves, you start having people that are hawkish that are like, I'm not, this economy looks a little, weaker. And, then you start thinking, okay, well, how might they, tailor monetary policy due to, their shifts in biases. So, again, we have Waller speaking at George Mason University in Washington D.C. Also, other Fed speakers are going to be speaking on Tuesday. We have Bostic, Bowman, Collins. Wednesday, we have PPI. So producer prices, we're going to see what the inflation is on a producer level first and foremost, right? So that's going to be a big deal going into Wednesday. Now I'll stay with the dollar, but I'm going to go to the euro since it's so heavily it's the dollar index is very, very much weighted by the over 50% of the euro pair. But you'll notice, and I don't have to draw out this red line. I'm going to draw it out and I'm going to delete it, right? We have the same situation happening in the euro than we do on the dollar index. So what does that tell you? Well, first of all, you guys know that, I warned about being too bearish to the dollar last week, right? And I've seen a nice reversal at the end of last week. And just take a look at the weekly candle, by the way. That's a hammer, like hammer time, like MC hammer time, you don't want me to do that. No, we're not going to do that. Okay. But you'll notice that we have previous support giving us a little false breakdown, right? And a nice it's actually a long lower shadow doji, believe it or not, but it's a hammer since it was in a downdraft or downtrend and, reversal. It's actually a bullish hammer, but you could look at it a long lower shadow doji and they tend to be bullish anyway. So what does that mean? Well, that means, we get much above like 106.50 and we'll be, taken back off again in the euro, getting everybody on the short side in the dollar, getting everybody all bearish. And then next thing you know, everybody on bullish, as everybody's like, all the bears are like, oh, forget about it. I'm not going to be bearish anymore. I guess the dollar is going to be going up, and I'm going to get bullish here. Get all them bullish, and then next thing you know, the euro's trading back at 110, and everybody goes, what the fudge sickle? Yeah. So anyway, we got PPI. On Wednesday, we got Waller again. He's doing some fireside chat. Then later that day, we're going to have the FOMC meeting minutes. On Thursday, we have, back to Mexico. We have Mexican industrial production, but then we're going to have CPI and then unemployment claims. Now, let's talk a little bit about CPI really fast. I want to talk a little bit, and let's go over to the dollar. And that's not the dollar index I wanted to look at. I want to look at this one, right? The one we were just drawing on. Was that the one we were just drawing on? No, I guess we were just drawing on this one. Yes, I know. It's a daily. Okay. This is the dollar index, the actual index. So let's talk about data, and let's talk about what happened on Friday. So Friday, and if you don't listen to myself and the rest of the team live, we'll be covering CPI live. on the morning edge, or excuse me, not the morning edge. That shows private for Forex Analytics subscribers. But we'll be covering we cover CPI, we'll be covering PPI right on the face show. So you'll see there's the morning edge right there. Here's the face show, right? This is the flow show. The flow show and the face show are all free. Now, if you don't listen to myself, Ryan, K-Man, hosted by Dale, you don't listen to us every day. And then Grega pops in, Stelios pops in, Steve will pop in from time to time. If you don't listen to our team, live, and it's free, that's kind of like an update. If you're only listening to these week ahead videos, you're just hearing my view right at this moment, but they can obviously change throughout the course of the week as data is being thrown at us, as it should be. Well, we cover CPI and PPI live, and last week we were talking about obviously the jobs report, so we covered it live. And the jobs report came in much stronger than expected. And initially the S&P sold off. And I'll go to the S&P chart in a little bit, but the S&P sold off, the dollar rallied. And I warned you via a YouTube short video, a little 60-second video the day before. We talked about it on the face show. I'm like, listen, weak data, or strong data, you have to be really careful with that. The market's going to eventually say, well, hey, good jobs data. We might not have a recession here in the US. Let's buy stocks. And that's what happened. Stocks rallied, the dollar sold off, and by the end of the day, we closed much weaker on the day in the dollar index. But CPI is going to be a little bit different. Strong data is actually bad for stocks. Different than what had happened on Friday. I want you to understand why. Because inflation is the markets and the consumer and the market's nemesis. And it's the Fed's nemesis too. It's the genie that they're trying to put back in the bottle. It's the toothpaste that's already outside of the tube, trying to stuff it back in the toothpaste tube. That's inflation right now. So higher inflation is bad for stocks, and it's really good for the dollar, because the market will interpret that as the Fed has to continue to raise rates moving forward. And that's going to be true with any inflation data. Like, we have CPI obviously out of the US on Thursday, but we have CPI in Mexico on Monday, and on Tuesday we have Norwegian CPI and PPI. So, the inflation is strong inflation, good for currency, bad for, well, in our case, it's going to be bad for local stocks. So just understand that concept. That's why the jobs report, you're like, huh? It was good data. Why'd the dollar slump? Well, I explained that too. So hopefully, even if that's all you walk away from today, just understanding that concept, give me a thumbs up. That'd be great. Okay. Continuing on. CPI, Friday, Thursday night, we're going to have Chinese CPI and PPI, which should be, that one's more of a unique situation, just because, no one wants, higher inflation, but maybe China does. Maybe China does want higher inflation because they've got they've got deflationary data that they're obviously exporting out to the rest of the world. We do have University of Michigan consumer sentiment. We got the Bank of England, Bailey, is also speaking. He speaks Saturday too, and he's speaking at the Institute of International Finance annual membership meeting in Morocco. It's not just him, but it's also Christine Lagarde. Now, we could talk a little bit about the cable, and I know so many people are big fans of Andrew Bailey, but let's not ignore the fact that we actually completed our head and shoulder pattern. It's complete. This is probably in retrospect and hindsight, which is always 2020, that was some sort of, complex head and shoulder pattern. However you want to look at it, it completed, right? And we're working off oversold conditions. And so what that really means is a move to, you got 123 here. Also, by the time you get there, 123.50, and then you have the 200 DMA. I would say this whole area is really big resistance. in the cable. Everywhere between, well, actually I go even a little further. Everywhere between 123 and basically 124 is going to be resistance. It's going to be big resistance. And the reason why I say that is because if you are a sterling bear and you're like, I don't care, UK is going down in a ball of flames and down with the ship, and if that's your attitude and that's how you want to trade, the stagflation environment in the UK, then look for a short around the 123, 124 level. I tell you what, if we get much above that 200-day moving average, I don't think I'd want to be short the sterling. I'm just saying. Just saying. All right. We also have Harker speaking at the this is on Friday, 2023 Economic Outlook at the virtual event in Delaware State Chamber of Commerce. He is expecting questions, and so just keep that one in mind. Now I'm going to cover just a few other markets, but before I do that, if you want to learn how to take advantage of all of this, make sure you guys and gals check out the Trader Funding Program, because in this higher volatility environment, and you see stocks are coming down. Why risk your own capital? Take an assessment. See if you can actually get started in trading other people's capital, right? Like Trader Funding Program's capital. You have to take an assessment, and the assessment you have to pass in a demo environment. And once you're outside of the demo environment and you pass, that means you can't lose more than 6% in a demo environment. You have to make 10%. There's a couple exclusions. It's a trailing 6% based on your high watermark when you're trading, but you can't lose more than 6%, and you got to make 10%. If you can do that in an unlimited amount of time, then you can start trading larger amounts of money. Now, when you're in the Trader Funding Program for a certain period of time, you are allowed access into Forex analytics. Why do we do that? Because we want to help you. We want to help you trade, our capital for Trader Funding Program. We want you to be part of our organization, and we want you to have good trade ideas. And you can be involved inside of the Forex analytics community, be in the chat rooms. You can see what trades that I'm trading. You can see what positions, when you're in the chat room here. You could see, hey, Blake just sold some euro dollar at 105.93. Great. Wow. Okay. Well, maybe I was long. If I'm long and he's shorting, wow, maybe I should think about that. I should ask Blake, why is he short the euro? And then you can ask me in the chat room, and I'll tell you the reasons why. All right. So there's a lot of chatting going on in here in the general chat room. We have the news and research room, the trades room, the S&P room, the macroeconomics, which is the flowonomics room. We even have a Spanish chat room. So if you want to be involved in our community and understand what we're doing, you can be involved through the Trader Funding Program. You can be involved through Forex analytics. There's several different ways. So anyway, back to the indices. I want to talk a little bit about what's happening with a few things. All right, let's go to what's happening with the S&P. So with the S&P, and actually that's not the chart I wanted to use. I want to use this chart because that was the spiders, I believe. But anyway, you guys know, because we talked about it, just the major levels of support we are on. Big support, 200-day moving average, 38% retracement, previous breakout points, right? Channel support, 161% extension. I can go on and on and on about all the levels of support and reasons why we would bounce at 4,200. Go back and look at last week's video. I gave them all to you. If you just sat there and said, I'm not doing anything, I'm just going to buy the S&P when it gets to 4,200 because there's good risk reward to be on the long side, you're looking at me right now going, man, that was pretty good. Yeah, now you're at 4,300. What are you going to do? Well, with everything that I just told you, now you're back at the previous breakdown point. And I'll say this, that knowing that we have inflation data next week, knowing we have bank earnings next week, and knowing that yields continue to rip higher, you have to be really careful being on the long side of equities up here. You really do. You got to just continue to watch these 10-year yields. If we continue to blast higher in the 10-year and the 30-year, you know, that could be. That could be a big issue, right? Because you look at the acceleration that you've seen on the long. You can go into the shorter end too, you know, to the 5-year, 2-year. You can see that, you know, yields have just been ripping, and if that continues, it's going to weigh heavily on equities. So you saw the S&P. Let's take a look really quick. I want to show I want to show you the DAX, wherever the DAX is. Oh, here's the DAX. I mean, look, the DAX is, we're kind of in between fib levels here, but you can imagine any rally back to 15,500 is going to have some resistance. I think we mentioned that last week. Now that I'm thinking about it, I think we said, hey, this is going to be previous support, should be current resistance, and it was. We went into a new trend low. So lower highs, lower lows. And this is the scary thing. This is one of the markets that I think you all have to really pay attention to, is the Nikkei, because we finally broke back below 31,000. Now, why is this a big deal? It's because the Warren Buffetts of the world, not like there's many Warren Buffetts, but there are a lot of investors like him that are parked in Japan as I don't want US exposure. I don't want European exposure. I don't want Chinese exposure, but I'll take Japanese exposure because their rates are pretty damn low, right? Right now, you can see the Nikkei is dipping, and that is a risk for bulls. We start breaking below 31,000 in a meaningful way, you're going to start to see, you know, that's when people go, well, I still want to be long Japan, but I don't really, you know, I had some S&P exposure. Let's just go ahead and sell that, or I had some FTSE long exposure. Yeah, I don't want that anymore. I want to stick with Japan, but that's when you start selling other things. Oh, that Bitcoin. When the hell am I even owning Bitcoin right now? It's not going anywhere. Let's get rid of that. You know, you start getting that attitude when you start to see, you know, key levels and exposure breaking. So anyway, just some food for thought. Now, if you want more analysis on the rest of the markets, you know, go join our face show every day. We'll even be there on Monday, even though it's a bank holiday, and go on the Flow show. That's a free show during European hours. We can cover all the rest of the markets as well. But I want to say, if you all really enjoyed this video and you think it's really preparing you for the week ahead, make sure you give us all a thumbs up, my team included, because you know, this is going to go into editing, to social. We got to, you know, chapter all the parts of this video. There's a lot of things that go on behind the scenes. So make sure you give the team a big thumbs up, and make sure you join me Monday morning on the Face Show. And I want to thank you all for spending your very valuable time with me. I know it's important to you, so it's important that I thank you for that. So thank you. I'll see you on Monday. Hey traders, this is Blake Morrow with Forex Analytics. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.